Hello and welcome to Crypto CFOs. My name is Taylor Zork, and today we have on the program Dr. Stein Smith. He is a college professor at Lehman College. He's an assistant professor there. He is a board member, an award-winning researcher, 40 under 40, accounting thought leader, and many more things as well. I'll let him do a full intro of himself, but welcome to the podcast.
Absolutely, Taylor. Game to be here. And so, yeah, and I guess I've been in the higher education space since about 2017. And then prior to that, I was in industry working corporate accounting, corporate finance roles for about 8.5 or so years prior to that. And so basically, my whole outlook and the whole sort of ethos that I always try to bring to this conversation is sort of half practical and half academic education. So hopefully I can add some value here today.
Yeah, absolutely. So yeah, we get a lot of people on the podcast that are more, either involved in the tax practice side or they are one person was from an industry side developing a chain called audit chain. But today it's really nice to have this perspective of someone who's actually in it, kind of teaching the next wave of potential crypto accounting professionals and tax professionals. So yeah, I'd love to jump right into it and ask you a few
Sure.
questions because I think that your perspective is very unique and can kind of give those come up and coming in the industry a lot of great insights.
Absolutely.
So I just would like to have you discuss a little bit about your experience with presenting to CPA societies on topics related to the crypto industry. Like, what are some of the challenges you faced in communicating complex concepts to a non-specialist audience?
Yeah. So off the top, I've been giving talks to corporate partners and other sort of bodies of CPAs, and I've been doing that since about 2016. And so off the top, the overall understanding and interest is way higher now in 21, 22, and then now into our current year. The overall interest and understanding is a lot higher, but the uh, but the two main issues that I still see the most on is one, how to translate sort of having a good base level understanding around crypto assets into actually building out a firm practice arm at your company. Or on the other hand, helping any external clients better integrate blockchain and crypto into their operations. One. And then two, obviously all of the headlines right now going around about FTX and finance and some audit firms actively pulling out of doing audit work in this space. That is sort of re-energizing this whole conversation and this whole really outdated angle. I think that the whole space is a massive Ponzi scheme. So on the one hand, it's that moving from a awareness and understanding to a more operationalized view. And then, as always, right, trying to point out and then trying to push back on some of the other points and other negative headlines out there.
Yeah, I think that's a really good point. I think that some of the resistance I see is, people have that ammunition like, oh yeah, it's everything's a Ponzi scheme. It's not real money. If I can't touch it, it's not real. And I mean, ultimately, I think the biggest thing that the FTX collapse highlighted is the need for accounting help here, and the fact that when you do rely on centralized entities in a decentralized landscape, you have all the same problems that you have with centralized entities, which is you have lack of transparency, you have all these other problems, lack of accountability in a lot of standpoints because of the lack of due diligence that was done in the bigger partners that invested in FTX. So yeah, that's a big hurdle I imagine to kind of overcome.
Yeah, and it also does highlight right to sort of uh, add on to your point, Taylor, is that honestly, yes, FTX, it was a company in the crypto space, but the issues and the problems that happened at FTX are not unique to crypto or to blockchain, right? The more and more evidence that is coming out, it pretty much looks like a straight old-fashioned fraud,
Right.
right? There was no governance, no controls, no anything really at this company, and it was treated, as I've read, basically as a giant pool of money that
Yeah.
was only able to be accessed by a small handful of individuals. So, and I've been saying this for a long time now, that in order to have crypto assets and blockchain companies at large move really into the mainstream, there are going to have to be tools, right, that are not exactly like current audits and all the rest, but they are going to have to mirror those tools to help sort of build up trust and confidence in the industry and in the individual actors. But as always, right, having a handful of large influential players at the top of any industry really does open up the a door for issues about fraud or other excesses of having that much control over any one industry.
Yeah, absolutely. And I mean, when you're running a $32 billion organization and you're using QuickBooks, it's a little bit, things get a little
There
bit
are some
messy.
questions. Yeah.
Yeah, yeah. Cool. Well, moving into more of the educational side. So you're obviously, we mentioned before, you're an assistant professor at Lehman College, and in your lectures with students on the subject of crypto accounting, what are some of the key takeaways that you strive to impart on your audience in these courses and these classes?
Yeah, and so I try to hone in on a handful of core topics, right? Because blockchain and crypto are humongous areas, right? And so in any course, be it tax, audit, cost accounting, right? There are always areas that as you're going through a course, be it a brand new course or a current course, right? That as you're going through topics like inventory, cash management, tax issues, it's very easy to then bring in headlines and other topics, either directly or indirectly connected to blockchain trends, crypto asset trends, and to try to sort of bridge that exact same gap that exists in current practice. This sort of base level understanding of, okay, so I've heard of crypto, heard of blockchain, heard of NFTs, kind of understand it all, but then how do I take that base level knowledge and then translate that into applications? One, and then two, it's always been, or it has been rather, quite encouraging for me that in any ongoing conversations with other faculty members or the higher ups at these institutions, right? The provosts and all the rest, that basically all of them are, one, interested in having contents developed to blockchain and crypto, but two, they aren't really sure how to start. So it's really sort of a part one, part two. One, if 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 you as an educator, be it in a classroom or in a online CPE course, can bring in right topics, facets, sort of little nuggets of information connect the blockchain and crypto to current areas, that always helps make it more real, right, for both you and your audience. And then two, it honestly is on anybody who's in the educational training space to go out there and to be proactive and to have those conversations. And I'm also uh, extremely proud to also share here that actually Lehman College just issued in January 23 our first half dozen digital badges connected to two courses developed around blockchain and audit and then crypto uh, accounting issues. So all of that is all part of this process to, one, integrate these topics into current offerings, and then two, to aim to develop new content to try to capture more of the impact uh, on the audit side, tax side, and folks working in industry.
Yeah, that's awesome. I think that one of the strategies I use is to start to kind of try to demystify the whole cryptocurrency and blockchain space, because a lot of people hear those terms and they just kind of, oftentimes they shut down their brain, and their brain just doesn't work in the same way that it normally does. And I just tell people, put on your accounting theory hat. What do these assets look like? What does it look like we're doing here? What does it look like is being accomplished here in this transaction? So that we can just associate it to more traditional assets that we already know how to account for, And it sort of takes the mystification out of it, because people hear blockchain crypto and they're like, oh no, it's complicated. It's too complicated for me to understand. Because I think John Aller said it's everything everything you don't know about money and everything you don't know about computers all rolled into one is what cryptocurrency is. So for me, that's kind of my strategy, is to try to demystify it by kind of bringing it back to traditional finance and accounting, and trying to make that connection there.
No, and excellent point there. It's sort of a common phrase that I do always try to weave into any lecture, training, course, all the rest, is that okay, what are the underlying economics happening here, right? So what's the point of this transaction? How is this financial instrument actually operating? And then sort of going forward from there, it's a lot easier to then say, okay, so actually I can call this a NFT, governance token, enterprise token, fine. But then under the hood, how are these things actually operating? And sort of understanding that part of it makes the whole more complicated conversations easier.
Right, exactly. Um, and congratulations, by the way, for the badges. So are
Yeah,
those going to
yeah.
be NFT badges? Are they soul bound? How do they work?
So I'm currently uh trying to get to college to be more open to doing a few things with NFTs. I don't have anything public yet to share,
Okay,
but
all
I
right, sorry,
but I
yeah.
am working on that.
Okay,
But
cool.
I am working
Yeah,
on it. Don't
interesting.
worry.
We'll keep our eyes out for that.
Okay.
So another next question. In your opinion, what are some of the biggest challenges currently facing the accounting profession in relation to the rapidly evolving crypto industry? How do you see these challenges being addressed in the coming years?
How much time do we have? Um, no, and so honestly, sort of the two or three biggest issues I see are issues that aren't unique to blockchain or to crypto assets. One is that how do we integrate these tools and applications into one current practice, and more importantly, the cohort of students currently being taught in colleges, right? How do we get these tools into the hands of those people? And then sort of part uh part of 1A to that, how do we again sort of bridge that gap between understanding and application, right? And I do have to also add here that in the aftermath of FTX, there are a lot of questions being asked, questions that in hindsight should have been asked a lot earlier, on how do these audits work, how do these attestation agreements actually work, and and are the individuals and firms doing them understand, one, how to do them, and two, what the impact of issuing a attestation or a proof of reserve audit can actually mean for external users, right?
Right.
And so that is a big challenge. I think that isn't talked about too much, right? Because everyone's talked about the 150 credit hour, and all the rest, but it really is also a issue of how do we better communicate what our work products, be it an audit, be it a engagement or a examination, or some other type of
Agreed
engagement.
upon
How do we
procedures,
Yes,
yeah,
exactly. How
yeah.
do we better get that out to the marketplace so that the investors, creditors, regulators, and mass market understand the uh, the one, content in those, and then two, what any sort of limitations are on
Right.
those also.
Yeah, good points there. I think that we got lots of challenges ahead, and like you say, like how much time do we have? But ultimately, I think that yeah, there's I think there's a reckoning happening in the crypto space, and it's a great time to be involved and start to kind of shape how we kind of move forward, because you're gonna need to
Absolutely.
see kind of bigger firms start to enter the space, and reputable firms that are willing to put their name on the line, because ultimately, we saw Armanino and some of the failures there, and Prager made us and things like that. So ultimately, we want to have faith in these auditors that are supposed to be looking at the books and supposed to be giving us their insider, insights into it and their opinions on it. So,
Yes.
yeah,
And I don't mean to come on here and to be just audit,
right,
like a anti-audit person, but as after any sort of big change in how data is processed, payments are processed, audits and all of the other AUPs have to be updated, right? And they
right,
have to evolve. And unfortunately, it is more and more sort of looking as if it's actually as if it took the collapse of FTX to cause all of us to be having more comprehensive, more grounded conversations as to, all right, how do we actually handle this whole industry going forward? But
right.
yes, I mean, absolutely, right? The audit field is on the front burner right now, and all of us do have to do I would say, more comprehensive job as to how we're going to handle the space, and then two, how do we communicate these new changes to our audiences, be it the regulators, investors, creditors, policymakers, which is a whole other point of view. But it is going to be a uphill battle for a while. But again, it's a great opportunity to be proactive and hands up.
Exactly. So my final question here is, in your opinion, what are the most important considerations for businesses and organizations when it comes to accounting for crypto assets? Like, how do these considerations differ from traditional accounting for other assets?
Sure. So off the top, I always try to ask, why are you getting into blockchain-based payments, tokenized payments? Why, right? Is it connected to your actual business, or are you doing it more for a optics point of view? Either way is fine, but you have to understand that first. Two, do you have any internal policy as to how you are going to get into crypto? Uh, are you going to be in crypto via Bitcoin, privately issued stable coins, NFTs, or some other area? And then do you have policies in place to also help you manage that? And then three, are your current accounting systems able to actually handle this stuff? And and I've I've asked all three questions quite often, and uh, the question that is the most commonly hardest to answer is three, right? Are the tools and controls and accounting systems in place able to actually handle doing the bookkeeping for our new methods of payments? And so after outlining all 3 points, then I would say that then yes, as you get into blockchain based payments, tokenized asset control, all the rest, you are going to have to keep in mind that while on the surface these might look and operate like other financial instruments, the audit implications and any uh, uh, income tax implications are going to be different. So all of those have to also get sort of baked in to how you're going to implement it, and then how you're going to communicate the impact of that externally.
Yeah, I think that some kind of follow-up points. I think that like a lot of what you're describing is like good wallet hygiene. Like people don't really know that, people don't have that in their mind
Absolutely.
because they're
Yeah.
traditional finance. So I mean, ultimately, it's the same sort of concepts you would imply on a bank account. Like you don't want to commingle personal funds with business funds and things like that. You want to have separate accounts, but on
Mm-hmm.
blockchain, it's all free, to generate these new wallets. So having good wallet hygiene, knowing what transaction zero is, and not,
Yes.
so that you can track cost basis and things like that. And also other issues that come in that, I hadn't even thought about for, this was recently brought to my attention. But, sales taxes potentially are pinned to NFT sales. So you could potentially have the potential
Absolutely.
for sales taxes on NFT sales. So that could be something that if you overlook that could be a massive, a miss on your for your company if you're selling NFTs and you're not collecting these sales taxes, because it could come down the line 5 years and now you've got interest and penalties on top of those things as well. So
Absolutely.
yeah, lots of challenges, and it's great. Me, I love being in the space because I'm, you know, I had come from cannabis accounting, which is kind of cool. It was different, but then once you learn the one or two rules that really guide that one industry, you kind of done. And with crypto,
Mhm.
it's like you can't ever be done learning. So it's a
No,
very exciting space to be
exactly,
in.
exactly. No, and for all of the obstacles and the current headaches out there, all of those are also opportunities, right? So
Mhm.
one, educate ourselves. Two, educate our internal colleagues or external clients, and then three, translate that education into opportunities for us to grow and to develop and to move beyond only doing some of the more plain audit, tax, and other bookkeeping work. So
Yeah. Well, thank you so much for your time, Dr. Sean. It's great to connect again with you, and looking forward to continuing conversations in the future.
absolutely, Taylor.